Hi there, welcome to Nepi Invest. January is one of my favorite months of the year, investing months, because this is one of those months where small cap companies, typically small cap companies, release their quarterly report, either the Appendix 5B for mining companies or Appendix 4C for non mining companies. The majority of companies that do release quarter reports are struggling to become operating cash flow or free cash flow on a consistent basis. And when they can show the market and the ASX they are operating cash flow and free cash flow positive on a consistent basis, they don't have to release their quarterly report anymore. So it gives us a bit of an insight to how these companies are performing. And usually I will reward the first company to release their Appendix 4C or 5B of the quarter with a standalone video. And January 2024 is no different. However, I I am doing this video on OneView. However, it was a little bit of a surprise that OneView was a winner this year. And the reason it was a little bit of a surprise was because this company released their Appendix 4C on the first trading day of the quarter, the 2nd of January 2024. And I completely missed it. In fact, I wasn't even looking for Appendix 4Cs on the 2nd of January. And I have never seen a company release their Appendix 4C or 5B on the first trading day of the new quarter. So this was a little bit of a shock. And I only realized this when I saw that another company released their Appendix 4C on the 10th of January. And this company was Quest Communications, the second company to release their Appendix 4C or 5B for the quarter, 8 days after OneView Healthcare. So I just have to do a standalone video on OneView Healthcare. Also do a standalone video on the second company that released their Appendix 4C, Quest Communications, and I'll talk about that when I record that particular video. So who exactly is OneView Healthcare? I have no idea, except more than likely they're a healthcare company. Now, if you don't know anything about a company, you could just go to the website. They should have an about section here, about the company. They have leadership, contact, what they do, all this sort of thing. But I do like the about section for to get to know a company a little bit better. And it goes through their history here. Talked about 2008. Mark McCloskey found himself in a hospital in Dublin, Ireland, while his care team had been wonderful. He was amazed at how little support they had with information sharing, impacting patient satisfaction, and managing routine tasks. So more than likely, this is a path that set in place the development and the creation of this company, all about supporting patients when it comes to information sharing and that sort of thing. So I'm not going to delve deeper into OneView's about section. Now, one of the reasons I know this company is because of what happened, a little bit of hype around this company back in 2016, 2017. Share price of this company went as high as $6.20 in the middle of 2016. Share price right now is 24 cents. So more than likely, this company has not really shown the market. It's really shown the market that it has become a real business. And when I say real business, I mean operating cash flow positive, free cash flow positive, and profitable on a year-to-year basis. And we can confirm that just by going to TradingView and having a look at their income statement over the past 5 years. So revenue has gone from $13 million in 2018 to $13.5 million in 2022. So very little growth, if any growth at all. And the company, if we go to the cash flow part of this thing, has been operating cash flow negative $30 million in 2018 to operating cash flow negative $13.5 million in 2022. So this company has been burning through cash, and the market doesn't want to see that. The market had high expectations for this company back about 5-6 years ago, but those expectations have not been met. Now, maybe one of the reasons why this company released their Appendix 4C really early is because they had a really good quarter. So let's have a look at their Appendix 4C for this particular quarter. So here it is right here. And I'm not going to go through the activities report. If you really, really want to, you could do that yourself. Talking about a partnership with Baxter, formally launched, one new logo added, 16,000 contracted beds more. They also have a nice little graph here, net operating cash flow by quarter. So this company has been operating cash flow negative as we probably already realized by their yearly data every single quarter. And to be honest with you, looking at this graph, it's not improving. Now, going through the rest of this, I don't really care about any of that. Now, the most important part of the Appendix 4C, it's the cash flow from operating activities, section 1. Usually, I also look at all the other sections. There's about 8 or 9 sections in Appendix 4C, but the most important section is section 1, which we see whether a company is operating cash flow positive or negative. And then if you want to see if a company is operating or free cash flow positive or negative, we go to section 2, and then we look at operating or not operating capital expenditure, which is property, plant, and equipment. And we also can have a look at intellectual property, but that's a whole different thing. That is capitalized research and development, but we won't talk about that now. Anyway, receipts to customers 4.3 million, and this is for the quarter. Year to date, 12 months, $9.7 million. This is in euros as well. So this company made a fair bit of receipts in the last quarter of the year compared to the other 3 quarters. So the other 3 quarters, about $5.4 million of receipts. This quarter, $4.3 million. Now, this could be due to seasonality. Maybe OneView Healthcare's last quarter is always the best quarter. And we'll have a look at the cash receipts history for this company in a second. Now, even though this might be the best quarter, the company is still not operating cash flow positive, negative by 122,000, and for the year to date, 12 months, operating cash flow negative by 7.4 million. So this company is still burning through a plethora of cash. But in this one quarter, they are very close, quite close, to becoming operating cash flow positive. And since they don't spend much money on capital expenditure, $35,000, are almost close to becoming free cash flow positive in one quarter. But we're only talking about one quarter, not a whole year. I want to see a whole year where the company can become and consistently become operating cash flow and free cash flow positive. And if they can achieve that sort of thing, this company becomes a real business. They can grow organically, that sort of thing, without going back to the market to raise capital. Some of the other things I like to look at here is borrowings, proceeds, or repayment of borrowings, how much cash they have on hand. Section 4, this is quite important. Plenty of cash on hand, $11.5 million, but cash on hand did decrease because they're still burning through cash, but still $11.5 million of cash. I don't care about Section 5 typically. I don't care about Section 6. Section 7 is quite important. Debt. Do they have any debt? No debt. So this company is debt-free. They have net cash, and that is important. Section 8 is not relevant for this company. They have plenty of quarters of cash on hand. In fact, according to this, 95 quarters of cash on hand. And that is usually it. Now, I want to go back to the previous 2 December quarters just to see how this company has transitioned or performed in the past quarter compared to the previous years, looking at previous corresponding period. So we get rid of seasonality, or we're comparing apples to apples, not apples to oranges, if there is a bit of seasonality. So if we go back to the December quarter 2022, receipts to customers 3.7 million, so nice growth there. Operating cash flow negative by 598,000. So that includes government grants and tax incentives, 622. Did they receive any government grants and tax incentives this particular quarter? No. Okay. So looks like this quarter is a little bit better than 1 year ago. So let's go back 2 years now. And in fact, receipts to customers 5.5 million, and the company was actually operating cash flow positive 1.3 million. So this particular quarter was not quite as good as the same corresponding period 2 years ago. So operating cash flow positive 1.3 million, and for this whole full year, operating cash flow negative by only 3.9 million. So the company really hasn't progressed much at all over the past 2 years, just by comparing the December quarters over the past 3 years. Now, what I'm going to show you right now is this. So this is just their receipts history. I'll just zoom in, not zoom out, I'll just expand that a little bit. This is the cash receipts history going back ever since I've been following them when they listed on the ASX back in 2016. And what I'm looking for here is growth in receipts. And we don't really see any growth in receipts at all. The other thing you'll notice here is the last 3 December quarters have been their best quarters. In fact, 3 of their 4 best quarters since 2016 have been the last 3 December quarters. So I would suggest, without knowing anything else about this company, there is a better seasonality. They do generate most of their receipts in the last quarter of the financial year. And this was their second best quarter in their history, but still not quite as good as that December quarter back 2 years ago. So at this point in time, not that impressed with the cash receipts history. Company's still burning through cash. At this point in time, I probably don't or would not put this company onto my radar or onto my any watch list. And if we have a look at the daily chart, just to see if there's any excitement in this company right now, not much excitement. There was a lot of excitement in this company back between April and July of last year. Share price went from 6 cents all the way to a high of 32 cents in about a 3 month period. And there wasn't massive volume coming in. So I'm not sure what caused that excitement. There wasn't one day where we saw the share price run up. However, on the 28th of April, 2023, share price did increase 14.6% on pretty good volume. So this could be just a couple of good announcements from the companies, not companies, company, which might have excited the market for a brief period of time. But that would have been a good time if you're a shareholder during that very small period of time. Otherwise, share price is going sideways now, but still much higher than the all-time low. Was that the all-time low? Might have been close, not quite. The all-time low was way back in 2020. Otherwise, the last thing I just want to do here is look at the market cap of this company. So market cap, $161 million, which does seem a fair bit. So the market still has some enthusiasm in regards to this company. Does have some expectations about the financial performance of OneView Healthcare in the future. And I, again, would probably not be that interested because they're still burning through cash. Don't see that growth in receipts. And a market cap of $161 million does seem to be a little bit too high for a company that is still yet to fulfill or show it can fulfill its promise in the long term. So that's really all I've got to say about OneView Healthcare. If you have any questions about this company, maybe you're a shareholder of this company and you're way more bullish than I am, I'd love to hear your thoughts. So leave your thoughts in the comment section of this video. Otherwise, that's it for this video. Have a good day. And don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.